clearly taking place at this point in time, and we have also lost that 19,400 mark on Nifty. And if you look at the broader markets also, broader markets are not participating at this point in time, and we are seeing deep cuts there as well. What's really supporting the markets at this point in time? Let's pull up some of the gainers for you. Clearly, Nifty mid cap also down around 1%, and small cap also down around 1.5%. Clearly, it's the IT pack that is leading the rally and that is supporting the market at this point in time. Hindalco also among the top gainers, is the top gainers at this point in time, 2.5% uptick there. Axis Bank, HDFC Life and ICICI Bank among the other top gainers on Nifty. And on the flip side, if you see what's not really participating today, let's look at the top losers. Power Grid, Maruti, UPL, these are among the top losers, down around 2 to 3% each. Coal India, BPCL and TPC, these are among the other top losers that we are seeing at this point in time. And it's clearly the IT space, IT sector that is participating in the rally that we have seen so far. And apart from that, if you look at other sectors as well, apart from IT, financial services sector, PSU banks, they are not participating in today's rally. Pharma also down 0.5%, metal, media, all in the red today. So let's do one thing. Let's welcome our guest on the show today. We have with us Mr. Rajesh Palvia, who is the VP of Technical and Derivatives Research at Axis Securities. Thank you so much, Mr. Palvia, for taking the time out and joining us here on Business Today Television. So 19,500 was briefly seen on the Nifty index. So now with the earnings season kicking in and coming in at play, can we expect 20,000 going forward, or you see consolidation on cards?
So this is the sixth attempt where again Nifty failed to cross 19,500 mark. Again and again we are seeing that supply pressure is there around those level. If we go with the derivative data setup also, most of the call writers were still intact at 19,500, 19,600 strike. So which clearly creating a pressure on the Nifty whenever Nifty is trying to give breakout above 19,500. So for a near-term setup, we do expect that 19,500, 550 is going to be a challenging level for the Nifty. Only a major trigger, maybe it could be earning or some other news flow can give some boost to the market to give breakout above 19,550. Till the time 19,550 is not taken out, some consolidation we can see in the Nifty, and possibly it could remain in range of 19,200 to 19,550. In today's session, what we have observed that some of the profit taking is happening at the higher level and some long unwinding action is happening as we have weekly expiry. So some volatility is also due to options weekly expiry. So we expect some more pressure we can expect in the Nifty towards 19,350, 19,300, which is going to act as a good support area in this decline. So buy on dips is the overall strategy for the market, because overall market breadth and market setup is on the bullish side only. So we will use these dips as a buying opportunity. So we are just waiting for 19,350 to again initiate our long position with stop loss of 19,280.
Okay, absolutely. 19,350, that's the level. Keep an eye out on that, and it's a dip, buy on dips markets. Experts have been saying this. But one sector that is in focus, Mr. Palvia, and that is IT sector, and it's holding the fort. If you see, major of the gainers, they are from this space. And if we see the Q1 earnings as well, the key positive for the quarter was TCS big deal on order inflow of around $10 billion, and HCL Tech earnings missed the street estimates. And also if you look at other mid-cap IT stocks as well, they have been performing really well. Persistent Systems, Zensar Technologies, Birlasoft. So what would be your advice as far as this sector is concerned? Any stocks that you like from this particular sector?
So most of the investors were cautious ahead of this earning for IT stocks, because a lot of underperformance we have already seen in most of the large cap IT stocks. Mid cap IT stocks have done well, especially in last couple of weeks, and we have seen some bit of recovery in terms of prices from mid cap IT space. But still, if we analyze, most of the large cap IT stocks are still struggling to give breakout on their near-term consolidation range. Uh, Post TCS result, yes, some ray of hope is coming back to the street. That's why we are seeing the reaction in most of the mid cap IT in advance, and most of the mid cap IT stocks have done the IT space from the large cap IT space. We still feel that range bound behavior is going to remain in the prices. So if we analyze the TCS setup, TCS has recovered, but still we do believe that until the stock not crosses about 3400 level on a weekly closing basis, it's going to remain under consolidation mode only. Only breakout about 3400 could create some room for further more upside towards 3500, 3550. But looking at the near term setup, we don't expect that breakout to come in near term, and possibly TCS can remain in range of 3200 to 3400 for some more time. If we analyze the most of the IT mid cap IT stocks, they are looking one notch better compared to all large cap IT stocks. We like Birlasoft stock is continuously trading about to their mid cap midterm medium term breakout level. And looking at the overall setup, we do expect that if stocks continuously hold above 350 zone, 345 zone, then possibly Birlasoft can move further higher. And then next target for Birlasoft is towards 385 to 400 on the higher side. Another stock from midcap IT we like, that is Coforge. Stock has given a breakout in last couple of weeks, and is continuously holding about to breakout level of on the weekly chart. Looking at the setup, we expect that if stock continuously hold above 4650 level, then possibly Coforge can move up, and we can expect target of 5000 in the near term basis. And the third mid cap stocks which we like, that is Emphasis. Uh, the stock is also is consolidating on the after recovering from their recent low. And since last 3 4 weeks, we are seeing a lot of accumulation activity in Emphasis. Looking at the near term setup, we expect that once stock crosses our 1980 level, then possibly we can see a rally towards 2200 in the Emphasis also. So Emphasis is also looking attractive. One can buy this stock also with stop loss of 1850.
Okay, absolutely. So these are the stocks that are coming in, and Coforge, by the way, is up around 2% as we speak. But also, I want to talk to you about one other sector, and that is, new age internet companies. I mean, Paytm is not really participating in today's rally, but the stock is up around 60% in 2022 so far. And if you talk about other stocks, Zomato and PB Fintech hit their 52-week highs today. So your thoughts on this particular space? I mean, do you think now is the right time to step in, or one should stay away?
So Tani, clearly we have seen that revival is taking place in most of the new age companies. Zomato, PB Fintech, and other stocks are also doing well from this sector. So we do expect another round of buying interest is going to come in this stock, because stock all most of the stocks manages to give breakout of their previous swing high of November 2022. So which clearly indicates that after a consolidation and after a downturn, now stock has shown breakout on the weekly as well as on the monthly chart. So this momentum can continue further higher. So Zomato, we are bullish, and we expect that if the stocks holds above 75 level, then possibly next target for Zomato is towards 90 to 95. If we talk about PB Fintech, stock has run up quite well in the current week. And looking at the breakout on the weekly chart, now stock is trading about to all its important long-term moving averages. It clearly shows that buying interest is coming back in this stock, and we expect that PB Fintech can scale up further higher towards 840 to 860 zone. So PB Fintech is also buy, keep stop loss of 730 to hold your long position.
Okay, absolutely. Got that. And also talk to us about the auto sector. I mean, that has been on fire of late and sitting at record high levels. And do you expect the momentum to continue? Because, for instance, so you can see M&M, the stock is up over 30% on a year-to-date basis, and there are other stocks as well in from this space. But any stocks that you like? from this particular sector?
So definitely, auto is the one sector where we have seen that it has given a support to the Nifty to move to this all-time high trajectory. Banking and capital goods, this three sector was major contributor for this rally for the Nifty. And Reliance lately joined this rally, and it is now holding up the ground, and market is holding the ground at higher level. From automobile space, yes, we do believe that the most of the auto stocks have done well. And looking at the near-term, short-term setup, yes, we expect further more buying interest is going to remain. As if we go with the data setup, also is we if we go with the numbers which we are seeing on the month-on-month basis from the auto sales number, which is clearly indicating that demand is very well intact for most of the automobile segment, be it two-wheeler, be it commercial vehicle, or be it passenger vehicle. So we expect from M&M is looking very attractive, and looking at the setup, we expect that M&M is one stock where we can expect a target of 1650, 1700 from the current level, and possibly one can keep a stop loss of 1480 to hold their position on the M&M. And from two-wheeler space, we like Hero Motor. Stock has done well in last couple of weeks, and looking at the breakout on the weekly chart, we expect that if stocks continues to hold above 3000 level, then possibly Hero Motor can be moved towards 3250 to 3300 on the higher side. So Hero Motor is buy, as well as M&M is also buy from the automobile space.
Okay, absolutely. Keep an eye on that. And also, Mr. Palvia, what is your take regarding the entire defense pack? I mean, is there any name that still looks, attractive despite the run up that we have seen so far?
We have seen, clear uptrend in most of the defense stocks, be it Mazagon, be it HL, be it Bharat Electronics or BDL. Most of the stocks are, continuously in higher top, higher bottom formation, and clearly the stocks prices are indicating that, these stocks are going to deliver furthermore upside from the current level. So buy on dips is the clear strategy for defense related stocks. So our preferred pick is, yes, Mazagon is one stock where we are holding our bullish view. If you get any chance to buy in any pool of action towards 1600, 1580 is a buying opportunity to buy Mazagon, and on the higher side, we are projecting target of 2000. Another stock which we like, that is HAL. Stock has done well in last couple of months, but still looking at the near-term, short-term setup, we expect that if stocks continuously hold above 3650 level, then possibly this stock can again scale up to the level of 4000, 4200 on the higher side. So Mazagon and HL, these two stocks we like from defense sector.
Okay, absolutely. And bulls clearly trying hard. 65,500, we are above that mark on Sensex, and Nifty also now above 19,400. But lastly, Mr. Palvia, any stock specific recommendations that you would like to advise, and any stocks that you are betting on, especially at this point in time?
So from pharma space, we have 2 3 trading session. We expect that Lupin can continue further more upside, and 960, 970 could be the possible target in the continuation of this uptrend, and possibly one can keep a stop loss of 905. Another stock and sector which we like at current juncture, that is metal space, and from metal space we like Jindal Steel and Power. So stock is continuously moving in higher top, higher bottom formation. Stock is very well placed above all its long-term, short-term moving averages. The stock is now trading near to day high. So we expect Jindal Steel and Power can continue further more upside towards 660 to 670. So Jindal Steel and Power is buy with stop loss of 620. These two stocks we like for at the current juncture.
Okay, absolutely. So these are the sectors and the stocks. Keep an eye on that. And on that wonderful note, thank you so much, Mr. Palvia, for taking the time out and sharing these wonderful ideas with us. Thank you. Okay, so with that, it's time for us to wrap up this edition of Market Today. But don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn, and Instagram. So stay tuned for all the latest market updates, and many thanks for watching.
Hello and welcome. You're watching Business Today TV.